Assalamu alaikum, everyone, and peace be upon you all. My name is Umer Shakur, co-founder of halalstocks.co. I will be your host for today. We have a couple of speakers on today. Rehan Ahmed, who's my co-founder at halalstocks.co, who will take you through a brief introduction on why stocks, or I guess the benefits and advantages of using the stock exchange and investing using stocks. And then we'll pass it on to Brother Sultan Karim, who's the founder of Sabr Trading Academy, who will be our main speaker, who will take you through a bit more detail of how the professionals, invest in the stock market. So without any further delay, I will pass it on to Brother Rehan Ahmed. Sorry, just one thing before I continue. So everyone is muted by default. If there are any questions, please use the chat function to send through your questions, and inshallah we'll get to them in due time. The other thing is the meeting is being recorded. So in the near future, after it's done and we've edited it, we will upload it and share the link with all the people who have registered with the email addresses that they used. So without any further delay, I'll pass it on to Brother Rehan.
Jazakallah khair, Umar. Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome, and alhamdulillah, it's an honor to be here with you today, inshallah, to, I guess, help, the Muslim Ummah level up on their investing game. Alhamdulillah, or, we should, inshallah, make great intentions with this time and this opportunity that we have together, inshallah, to not only benefit ourselves, to benefit the ummah, to benefit humanity, inshallah, because earning halal income is it's an obligation, it's a personal obligation for everyone, but also to invest and participate in the entrepreneurial aspects of life and in muamalat is also an act of worship, right? And so, when the Prophet ﷺ established the mosque, the masjid in Medina, uh, then straight after that he went and established the marketplace for Muslims, and he also ruled out a number of marketplaces in that time where they were being taxed unfairly and so on, and so he decided, as it's mentioned in the hadith, he picked a market for the Muslims, said this is your market and it will always remain your market, right? And it was and no taxes will be levied there. So it was one of the first things that the Prophet ﷺ established for his community was how they can earn halal, and also how they can engage in the markets, pretty much straight after establishing the mosque of the Prophet ﷺ. So um, I consider this part of fard ayn for every Muslim, that how they can earn halal, but also how they can provide partake in the entrepreneurial spirit that came with Islam as well. So inshallah, with that, let's begin. Bismillahir Rahmanir Rahim. So I wanted to jump straight into it and have a look at the options that Muslims have, right, in across a broad range of asset classes, and why we, many years ago decided to really go down and pursue the stock market as one of the most unique asset classes that Muslims can invest in. So first, obviously, I'm going to go start with the top circle in the Venn diagram. Obviously, we want to remain in the Sharia compliant universe of asset classes that we can invest in, right? And so, from the left, that's venture capital, private equity, real estate. Those are all types of Sharia or potentially Sharia compliant assets that Muslims have access to. And then on the right, we've got robo advisors and which are people in their super fund, for example, will typically have it in a robo advisor. Wahed Invest is a very famous robo advisory platform. And then obviously you've got gold and silver, sukuk. and commodities, right? So that's kind of, in broad strokes, the entire Sharia compliant universe. Stocks are obviously also in there. And then looking at performance, there aren't that many asset classes that will, provide you greater than double-digit annual returns. And so, obviously the stock market is definitely one of them, but venture capital, private equity, real estate also can provide returns like that, especially if you're into real estate development as opposed to just buy and hold. And then the circle on the right, which is liquidity, right? So there are many asset classes that may be liquid but not Sharia compliant. We often see ads for forex trading or derivatives or CFDs. These are all have their own issues from a Sharia compliance perspective. Likewise with futures and options and warrants as well. So these are all highly liquid asset classes, but may not be Sharia compliant. And we define liquidity here as like less than 5 days to access your funds. Right. So liquidity risk is a different type of risk you have to manage. Many of us who have real estate investments, for example, know that it's not a very liquid asset. And so if I need to, fund my child's college education or go to Hajj or whatever, I can't sell, 1/10 of my house, for example, or a real estate property that I've got, and then I have to wait 3 to 6 months to actually get that asset class liquidated. Venture capital, you're looking at 10 years plus. And likewise with businesses, even if you buy a small business, it might take you 2 years to at least get your return on investment. So stocks are unique in that they provide you very, very quick liquidity if you need to get access to your funds in a short period of time. So the stock market provides a sweet spot for us to investigate high yields, highly liquid, and obviously Sharia compliant returns, provided we know how to wield the stock market, so to speak. So I'll give you just a bit of a teaser with regards to halal stocks. Halal stocks is all about investment performance, right? So we help individual investors, or even if you're a fund manager, we give you strategies that, one, are unique. They're based on our own research internally, and also allow you to exploit the advantages that you have as an individual self-directed investor. When you're managing money for others, there are a number of other considerations that you have to take into account. But when you're managing money for yourself, it's the most important factor is just something that is completely under your control, which is your emotions, right? So your intestinal fortitude, as we say. So if you can manage your emotions, you can make a lot more returns than what professional fund managers offer, because at the end of the day, their priority is keeping the fee, and that means they need to make sure that they don't expose people to too much volatility, right? Because with volatility comes emotion. And so the advantage that we have as retail and individual investors is that we can, if we keep our emotions in check, we can actually get access to much higher returns, provided we follow the right strategies. So this is looking at returns of a real life Islamic fund based here in Australia over the last, from 2017 to 2021. Versus the Sharia compliant SPUS version of the S&P 500. So that's in the US. ETF, so that's an index fund. And then an active strategy by halal stocks that we've been, back testing for a long, long time. And so you can see the orders of magnitude difference that you can get when you have access to, one, the right strategies, and two, the right appetite for risk. And so you can definitely outperform the professional fund managers in this manner. So I'll move along. The other thing I wanted to really touch upon was why Sharia compliance, right? So obviously, alhamdulillah, if we're Muslims, we want to make sure that our earnings are halal, but it doesn't mean that we're being disadvantaged. That's one thing that, even if and I tell this to non-Muslim fund managers, non-Muslims who are in the industry, in the investment industry, that there is actually an advantage to being a Muslim in the markets. And I'll give you two examples here, but I can reproduce these examples for Europe and Japan as well, for Australia, as well as the United States and the Global 1200 that the S&P benchmarks against. So obviously S&P 500 and S&P Global, they're not a Muslim organization, but they do have Sharia versions of their indices, and you can go on their website and have a look at how these indices perform versus their conventional counterparts. And you'll find, if you look over the 10-year period, in both instances, the white line is the Sharia total return version of the index, and the blue line is the conventional index. And in both instances, you'll see that there is an outperformance. So just by mere fact that we're Sharia compliant investors, Alhamdulillahi Rabbil Alameen, means we're already at a advantage, meaning the stocks that are within our universe are already tilted in our favor. So we're definitely planting in fertile soils, so to speak. And so that's one advantage of being a Sharia compliant investor, but also it's also like in Deen and Dunya, you're not missing out. So don't feel any FOMO when you see non-compliant stocks, for example, that people are investing in, because the universe of stocks that we have to invest in, one, it's very large, and two, it naturally outperforms the conventional average return. So alhamdulillah Rabbil Alameen for that. At this point, I will hand over to Brother Sultan to introduce himself and and also share the bulk of the topic of this webinar, which is helping everyone here level up their investing game as well. So let me hand over to Sultan.
Assalamu alaikum, everyone. Thank you for your introduction, Brother Rehan and Brother Umar. I'm now going to go through the bulk of the presentation, so let me just share my screen. And let me know if you can see the presentation. Yeah? Okay, so the bulk of this presentation is going to be how to invest like a professional fund manager for Muslims. Now, to introduce myself, I'm founder of Sabr Trading Academy. And throughout this presentation, you'll realize that patience is the #1 skill. As Brother Rehan said, controlling your emotions and patience go hand in hand. And that is the #1 skill when it comes to investing or trading. My name is Sultan. I'm founder of Sabr Trading Academy. I'm a chartered accountant, KPMG qualified, and I've been working for award-winning hedge funds and PE funds since 2013. My career highlight to date has been generating trade ideas for a family office, and I was there for around 4 to 5 years, and we increased the AUM of that fund from £70 million to over £200 million over that period. Now, that was me attending weekly investment committees with the head portfolio manager, pitching my ideas, and then eventually executing those and holding them for up to 12 months. Now, my mission in life now is to help Muslims become financially literate so they can generate their own wealth, inshallah. And to date, Sabr Trading Academy started around 9 months ago now. I've had around 30 people come through the course, and I've helped them save over £200,000 in potential losses that they would have made. And these are students who message me every day and they say, if it wasn't for this course, I would have lost £20,000 or £50,000, for example. So I'm on a mission to help educate the younger Muslims who fall into these traps. But my emphasis is not on day trading. It's not on generating £10,000 a month in income. It's more long-run sustainable wealth creation, but in a Sharia compliant manner. So that brings me on to the contents of today's webinar. The first thing I'd like to discuss is going back to the very start, and that's your market participants, who you're interacting with when you engage in the stock market, and what are their agendas? Why are they participating in the market, and what brings them to the market in the first place? Then I'm going to compare your traditional fund manager and the retail trader, meaning the everyday trader, me and you on the streets, and how our approaches differ and how our outcomes differ because of our original approach. I'm going to further emphasize why retail traders lose by highlighting a few common mistakes. And then I'm going to introduce you to something you've probably never seen before. And that's the framework that I used in the hedge fund world and the vast majority of equity hedge funds use, which is a template to generate their trade ideas and then control their risk management, their psychology, and also their evaluation at the end. So that's very interesting. That's going to be the bulk of this presentation. And I'm going to go through an example of how to actually generate a real life trade idea. So inshallah, everyone who's here today will walk away with a good idea of how things work and how they can approach it in their personal trading or investing. I'm going to summarize by looking at 5 key learning points. So everyone who's here goes away with something useful. And I would urge you to get a pen and paper and maybe copy these down so you have them to note. At the end, I'm going to discuss the course that we offer at the Academy. And if you have any questions, then we can answer those as well. So that brings me to the first part of the market. Before you enter the market, it's very important that everyone knows what they're up against, who's on their side and who's not on their side. And that you can only do that if you know the arena that you're stepping into. So first, I want to discuss the participants, who is in this market, before I go on to what their agendas are and highlighting how they differ from ours. So a buy-side trader is a fund manager or someone who manages institutional money for pension funds or alternative asset managers, and they work professionally in the fund management world, and they have much larger capital compared to the retail traders. Buy-side traders normally spend 10 hours a day in the office researching stocks, investing, and that is their life. The stock market goes through their blood. And compare that to us, who are the retail traders. We've got a full-time job. We just want to make maybe some passive income or maybe save something for a house or for our pension pot. So we're not as skilled and we're not as experienced when it comes to investing and trading. Then we've got the algorithms. These are computer code that executes trades. Normally, the buy-side traders and the professionals use algos to execute trades, and it's not normally something that we see retail traders using. That gives them a speed advantage over the retail trader. Then you've got your stockbroker, who sits between you and the exchange, and they give you, when you put your buy or sell order in, they will execute the trade for you, charging a commission in the middle. Then you've got your educators who are on Instagram teaching everyone how to do FX trading. You've got a few genuine traders who are educators, but they're very hard to find. And I would say I happen to be one of those people who are the genuine educators. Then you've got your media, your mainstream and your social media. And I would say they are the noise of the market. They're there to distract you. And sometimes they even get paid from the institutions to put an advert in a newspaper or on Twitter in order to pump and dump a stock. So now those are the broad participants. Now I'd like to discuss the agenda of why they're there. Now, your buy-side trader is there to protect their investors' capital at all costs. Their goal is to return as much as possible to their investors. And the benchmark standard is any fund manager wants to turn a $100 million fund into $5 billion as fast as possible. And the market metric for selling that fund onto a new fund manager is they then receive a 10% payout. So they want to walk away with $500 million and go onto their next project or into retirement. Now, not everyone does that, but that is the goal of the majority of hedge fund professionals that are on the buy side. Similarly, now moving on to the retail traders, our agenda is maybe not to protect our capital. Our agenda is to maximize our daily profits. We want to generate an income. We don't really have a plan. And if we don't have a goal of where we want to save, what we want to save for and how we want to get there, we just want to trade as much as possible because we think we're going to maximize our profits. And I'll come back to that on the next slide, next few slides, where this will be clear that our approach is very different to the buy-side traders. But to summarize the buy-side and the retail traders, our goal is the same. We want to protect our capital and we want to grow our capital. Moving on to the stockbrokers. Now, they want to maximize their commission on every trade. So if you're trading 10 or 20 or 50 times a day, your stockbroker is loving it because you're paying him maybe $10 a trade in commission. So as long as he can keep on getting that commission from you, the stockbrokers are not on your side. And again, for them, they love price volatility. They love to see retail traders panic, and they're not on your side. They don't really care if they give you the best price or not. For them, it's all about commission and P&L, profit and loss, earned every day, every week, and every quarter. Now, when it comes to the educators, there are some on Telegram and Instagram, mainly FX gurus with Lamborghinis and Rolex watches, and they teach you that you can trade sat on the beach in your business class or first class plane where the internet doesn't even work sometimes. But they're selling you that story that everyone wants. They want time freedom, they want financial freedom, and they want geographic freedom. Now, that story is there for people to go onto their courses and only learn technical analysis, which can be taught from any book. And typically, they don't have professional experience. So you can see that some educators, the majority of educators, are there purely just to make an income, as that is their side business, and they don't really have any professional experience. And as previously mentioned, the media is there to distract you, to create noise, to create panic, and most importantly, to sell papers and to sell stories. So when we look at the whole landscape, the only participants that are really aligned with our interests are the buy-side traders, the fund managers. But there's a big gap in our knowledge, and we should be aware that our stockbroker is not our friend. The majority of educators and all of the media don't really care about us. So we should try to emulate the buy-side traders. And that's why on this slide, I'd like to talk about our approach, our risky behavior, and the outcomes, and how the retail traders are different to the professional traders. So on this slide, I've deliberately blacked out the approach for the professional traders, because I want to focus on what we do as non-professional individuals. And then on the next slide, we'll see how it differs from the professionals. So our approach, typically the normal investor or day trader wants to generate an income. On the one side, you'll have those that trade multiple times a day, whether that's FX or stocks or options or whatever it is. And then you'll have the ones that typically tend to be a little bit older, a little bit more mature, and they're thinking about their pension and they're happy to hold for the long run. Now, with this approach to the market, the majority of retail traders don't have a large bank account. So they tend to have highly concentrated risk. They have FOMO, they have YOLO, and they think, I'm only going to live once. Even if I lose 10 grand on this one stock, I'll put in another 10 grand next month. So they only have typically one or two stocks. So if you're very diversified, you might have 5 stocks in your portfolio. Now, with that high risk comes high risk and high reward and high losses. And unfortunately, there's a statistic that says 90% of retail traders lose 90% of their money in the first 90 days. And these are people who use leveraged instruments like CFDs, and they're typically FX trading and using leverage on stocks. But they also, it's part of the reason is they get fed this story of you can earn a full-time income doing this on a daily basis, and they then spend too many hours looking at the computer screens, and it messes with their mind, it messes with their patience, and they don't have an approach. And the result of all of this is their outcomes are very binary. So they're not sustainable in the long run, and they do lose money over the long run. The eventual result of that is they then start their account again with some more funds, and they repeat the whole process again. The main reason for this is all your other participants are distracting you, and there's no clear plan. There's no knowledge in place where you can start. Now, if we compare that to the buy-side fund managers, their approach is totally different. And the reason it's different is because statistically speaking, the S&P is less than 1% a day volatile 80% of the time. So 4 out of every 5 days. If you're not using leverage, there's just no money to be made in the S&P 500. So they've taken a longer term approach. And I think the average these days of holding a stock is actually 6 months, whereas in 1955, it was 8 years. So as the market has shortened its holding length, the majority of buy-side traders now hold stocks for between 1 to 12 months. And that gives them enough time for the stock to move maybe 20 or 30% and to reach their goals and to take advantage of the volatility that happens over the 3 or 4 month period. Now, when you look at their approach, it's very different to our approach. And our approach doesn't make us money because the S&P is just not as volatile. And that has an effect on our risk and our behavior, but also the behavior of the fund managers. They have a very diversified portfolio. The sweet spot is around 20 stocks, where the benefits of diversification kind of tend to level out. But some large funds even have 50 or 100 stocks. And they have a golden rule in the fund management world where if they make profits, they will reinvest 50% of it. And that even goes for the bonuses that they receive at the end of the year. So if they're walking home with a $1 million bonus, they will reinvest half of that back into the fund that they're managing, just to align their interests with their investors. But the one more important thing to notice is they also charge a management fee. And assume you've got a $100 million fund, they will charge 2% of that, so $2 million a year to manage that fund. Now, why is that important? Because they use that 2 million to pay for everyone's salaries, to pay for the daily running costs of the fund, to pay for all the software, all the accountants, all the lawyers, and that is their day-to-day running of the fund. And that treat it as their income. So whether or not they perform, that is their guaranteed income. And that's very different to what we have. We are trying to generate income as non-professionals, which is totally the wrong approach. Their upside on the buy side is the 20% management fee, the performance fee that they charge on any profits that they earn. And of that performance fee, they will always reinvest half of it. So this leads to long-run sustainable profits, long-run wealth creation, higher AUM, and in turn, higher AUM leads to higher management fees and higher performance fees. And that is how they approach the market. So from what we've seen on the participants, there's a lot of conflict of interest, and our interests are aligned with the buy-side traders. So we should start to emulate them. So before anyone enters the stock market, you should know all this, and you should try to see which fund managers are performing right now, maybe follow them to see what their general idea is of the stock market, and try to emulate them as much as possible. But in order to do that, you need to avoid the common mistakes that retail traders make, alongside all the conflicts of interest that we suffer from as well. Now, I've highlighted 3 of them here. And the first one I've covered quite a lot, where if you use a bad stockbroker, you're not going to get the best trade prices on offer. If you follow people who are giving you stock tips or giving you FX signals, you're more likely to lose out because they're not there to help you make money. They're there to front run you in the market, meaning they'll put the trade on before they tell all their followers and hope the market moves in their direction. So that creates a lot of conflict of interest. The second, I would say it's the second most important point, is people are unconsciously incompetent. So there's a lot of things to learn in the world and they don't even know that these things exist. So then you need to know how to generate trade ideas correctly. You need to know that using too many computer screens is not going to improve your performance. When I was working at the hedge fund, I used to use only 2 computer screens, but on Instagram, you'll see people using 4, 6, or 8. And okay, it creates a good picture, but it's not going to create good profits. So all these bad things, we need to start come to reality and realize that all you need is 2 screens maximum. And you need to know when to use technical analysis, when to use your Sharia compliant apps to check for stocks. And you need to know that the mainstream media tips are not for you. Therefore, the large institutions to liquidate their positions to the retail traders. And that's why some institutions plug these adverts into newspapers in the first place. The third and most important retail trader mistake is your behavioral habits. So you will lack psychological control. So once you're now in a trade, you may have had a plan that I will sell when it reaches 20% profit, and I will sell if it reaches a 10% stop loss. But once you're in the trade and you're 5% up, you'll start to panic, and that's it. You'll let your losers run, and you'll take your profits too early. And that's a very common mistake, because you don't have good behavioral habits. You'll also lack self-awareness, because you'll never reevaluate your trades that you've done in the last quarter. So therefore, you'll never learn from your mistakes. And the very last thing I've mentioned quite a number of times now is you should not trade for income. If the buy-side fund managers are not trading for income because they've got a management fee coming in, then we need to have a permanent job and use our skills in investing to generate long-term wealth and not monthly income. So I hope that highlights all the things that we shouldn't do, and how we should emulate the buy-side professionals. And now I want to give you some green news, good news, blue sky news, that there is a solution to all of this, that everything is not doom and gloom. There is a way to make sustainable profits in the long run. And this is known as the WIS framework. This is probably the most important slide of today's presentation. And it's how I generated all those trade ideas, and we tripled all that money from £700 to £200 million in 5 years. This is the exact framework that most hedge funds use, with some variation. But it starts with the world view, your industry views, and your stock views. And there is a scientific and professional way of generating your world view of the economy, which we're not going to go into here, but I'm going to go through an example on the next slide. But once you've formed your world view, your industry view, and your stock view, that generates your trade ideas. And only then, as Muslims, we should start to look at fundamental analysis on the stocks on your watch list, and do some Sharia compliance screening to see which stocks are the best. Are they actually halal to invest in? And this is the part of your research that will generate you your alpha. Now, alpha is your returns above the market, which is what we want to do. We want to outperform the market, but we also want to be sustainable. So this is the area of the framework where this will generate your alpha. It will get rid of all the non-Sharia compliant stocks. But that's not the most important part, because now you could have the best trade ideas in the world. You could have a watch list of 20 different stocks that you think are going to double or triple. But if you can't control your emotions and you don't have sabr, you're not going to make any profit. Even if you're up 2 or 3%, you will sell for a small profit. And if you're down 10 or 20%, you'll tend to average down and make even more losses. So when it comes to self-control, you need to know your psychology. You need to know what your strengths and weaknesses are within trading or investing, and how your behaviors are in your real life, because how you behave in the stock market is a mirror of how you behave and control your emotions in your real life. When it comes to self-control, we also look at technical analysis. This is typically the only thing that every other educator will teach you, because that's the only thing that they know from various books and various YouTube channels. But we used to use technical analysis only to enter a trade once we've done all this research beforehand. So there's a fundamental reason why we're entering this trade, and we only use charts to time our entry and exit. And again, we'll see this on the next slide. The final thing is risk management. So before you enter the trade, you need to know your preset profit targets and your stop losses. And it's a plan that you need to stick to. If you stick to this template, not just in the stock market, but in your real life decision-making in life in general, you will be a winner in the long run. You'll have long-run sustainable profits. Your portfolio will grow slower, but it will grow sustainably and compound over time. And you'll become a better decision maker in your personal life as well, inshallah. So now I've discussed that, I'm going to talk you through the most interesting part of the presentation, which is how do you generate a real life trade idea? Now, this is an idea I looked at the time, and it's from the middle of 2021. And this is a very high level overview of how my mind was thinking, how I generated this trade idea. So the world was going through the COVID rebound in 2021. It was coming out of lockdowns. Exports were opening up. The planes were opening up. People were traveling everywhere. And all the leading indicators that the professionals look at, such as the future expectations of interest rates, the future expectations of inflation, everything was heading in a good direction. There was no war in Ukraine or Russia. And with all the indicators rocketing back up from the COVID lows, everyone was predicting that GDP would be higher. Now, when GDP is higher, normally these companies that produce goods and services will have higher earnings in their reports. And when earnings rise, the stock market rises, because there's a correlation between companies' earnings and the stock market, and the stock market and GDP. The stock market will always move before GDP. So, and we want to predict the stock market. So to be ahead of the curve, the point of looking at your world, industry, and stock view is to generate trade ideas that are ahead of the curve. Now, having said all of that, I was bullish at a world level. When it came to the industry level, the Bitcoin had just halved in price from around 66K to around 28K. And on the Fibonacci retracement level, which is a charting technique, it was on the 50% retracement level. So that's a typical level where I thought, okay, I think Bitcoin is going to rise again. Combined with NFTs were at peak popularity. And therefore, I came to the conclusion that if Bitcoin is going to rise, what stocks can I invest in to get exposure to Bitcoin without actually owning Bitcoin? Because you may have heard the saying, not your keys, not your coins. So if you're buying tokens, if you're buying Bitcoin on Coinbase or Binance or any other platform, and for example, they go bankrupt, you may lose your Bitcoin. But I wanted to get exposure to that in a secure way. So I thought, let's look at some Bitcoin miners that are listed in the US. So I decided to look at Marathon and Riot, the two market leaders in the Bitcoin world. And it turns out only Riot was Sharia compliant because of the debt to market cap ratio. So Riot was the only idea I could go forward with if I was to put this trade on. So now I've decided to invest into Riot based on all the views I've come up with. Now you have to devise your trade plan, and you have to think, how should I buy and sell it? What prices should I buy and sell Riot at? So I looked at Bitcoin, and I looked at two different charts in Bitcoin. And this is looking at the middle of 2021. The first chart I'd like to introduce you to, which you've probably seen before, is your candlestick charts. Now, each candlestick on this chart is 1 month. And if it's a green bar, if it's a green candle, then it's a rising price. And if it's red, it's going down. And with this chart, I lined up something called the Renko chart. Now, the Renko chart is different because it generally tells you the trend of where prices are heading, but it's not time dependent. So whereas the first chart is based on a monthly basis, this second chart, each rectangle on this chart represents $4,000 in price movement. So if it goes up $4,000, an extra brick is created, and is good for telling you just the general trend in any asset class. So when I looked at this, I would have, the first black line you can see here with the first green block here, that tells me that the trend has reversed and Bitcoin has started falling. It started falling at around 66K, and it went all the way down to 28K. So that's your first block there. It bottoms at 28K. And when it rises to 32K, this chart is now telling me you should buy Bitcoin. And actually, it carried on rising, and this chart now tells me to sell Bitcoin at around 56 to 60K. So it kind of predicted the rise in Bitcoin quite accurately. Now, based on what these two charts are telling me, how did Riot actually perform during that period? So remember, the charts told us to buy Bitcoin at 32K and sell at around 60K. When Bitcoin was 32K, this was in the middle of July, and the price of Riot was $25 a share. Now, when Bitcoin was 60K, the price of Riot in the middle of November, which is now 3 months later, was $45. And just using the Renko chart here, where it's telling me to buy Bitcoin at 32 and sell Bitcoin at 56 to 60, I would have bought Riot at the same time and sold Riot here. That would have given me an 80% return on investment within 3 months. Now, that's a very simple trade idea generation process at a very high level. Sometimes my trade ideas are a lot more sophisticated than this, but this is a very basic introduction of how you should be going about generating your trade ideas and investment theses. Now, we only use the Renko chart as a way to get into Riot by using Bitcoin as a proxy, because Bitcoin and Riot correlate quite highly with each other. And this was purely a technical trade. We only used the chart, but we used our fundamental reasons before that in order to get into this trade. But risk management and psychology are also important. These are a few rules that I stuck to before the trade happened, and what I do on a normal day-to-day basis when it comes to my stop losses and risk management. So I had a pre-trade plan. I have normally a 10% stop loss, and my target price is normally 3 times more than my stop loss price. That means that if I was to hit my profit target on 1 trade, I can lose 3 trades at my stop loss and still be broken even. So my risk management is intact. And that is shown by this chart, because you can see here, it went up from 25 to about 40, but it did drop back down to about 27. And if I would have sold here after 2 months, I would have made no profit if I would have panicked and not stuck to the plan. But at this point, the Renko chart was still telling me that Bitcoin was going to rise. So I held on and I sold here, and that gave me an 80% profit. So that highlights why you need to stick to your trade plan. You need to stick to your risk management, and you need to have strong psychology. Your mind needs to be stronger than all the other distractions and conflicts of interest that you see. So during that 3-month period, I had to have a lot of sabr and a lot of patience. Even though Bitcoin is a 24/7 market, the stocks are only open Monday to Friday, and that gave me a bit of risk over the weekend. But I had to stand away from the screens and not look at the Bitcoin price. In that period, Bitcoin rose 70%, Riot rose 80%. And that's a real life example of how you can form a trade idea, but based on the real world and what's happening around you. So that brings me close to the end of the presentation, but there are 5 key learning points that I'd like you to take away so you can emulate the professionals. Firstly, have a good broker, remove your conflict of interest, don't use chat boards, know who's on your side, don't join any Telegram groups because that's a pump and dump scheme, and don't pay anyone for any courses who have not worked in the professional field, because they're teaching you what you could probably teach yourself off YouTube or off Twitter. Second thing is very important. Remove your incompetence. So you need to learn how to generate the best trade ideas. You need to upskill your knowledge. You need to be in the top 5% of minds in the market in order for you to be competitive, because those top 5% are the fund managers that you're competing with. And you can copy them, you can emulate them, but you need to know your own strategy and what your own strengths and weaknesses are. The third thing is remove all behavioral issues. So you need to know yourself. You need to know what are your strengths, what are your weaknesses. Are you able to hold a stock for 3 months or 6 months? Or do you get panicked and do you want to sell every day or trade every day? You also need to know and teach yourself that it's not going to generate you an income. That's the first thing. That's the most popular question I get asked on LinkedIn. Can I get a passive income from this? Can I generate 5 or 10 grand a month? And the reality is, we are slaves to the market. We are not slaves to, the market is not a slave to us. The market will move when it wants to move, and we are slaves to volatility of the market. So we can only make X amount if the market moves X amount, and that X amount is unpredictable. So we need to adapt and have a more longer term approach. The fourth thing is we need to know which strategies and which instruments are permissible to trade as Muslims. And that's why your Sharia compliance screening comes in. And as Brother Rehan mentioned, the ETF, Sharia compliant ETFs that we went through have outperformed their conventional sector ETFs. So we have to believe that our Sharia compliant process is our alpha. It is going to generate above market returns, which is scientifically proven. And the fifth and the most important thing is you need to use the WIS framework, World Industry Stock Self-Control. The first half is generating your trade idea, and the second half is controlling your emotions and only using technical analysis when you should be using it. And that summarizes in around half an hour how you should be a professional level investor. So inshallah, I hope you learned a lot from the last few slides. I hope you took some notes. And if you have any questions, we should be able to answer them in the chat box. And now I just want to go over the last few slides and talk about more about Sabr Trading Academy, more about the course we have, and are you ready to level up your investing game? Because without putting in the effort, you won't be able to do that. Now, our course helps everyday Muslims become professional level investors in the right mind frame, with the right intention, which is to maximize our wealth for the sake of Allah, so we can give more charity, we can give more to our families, and we can have a Muslim household that is not dependent on haram income. With the course, I aim to turn losses into gains. And the first thing that we teach you is how to stop making consistent losses, which is by your behaviors and the basic knowledge and the basic attitude to the market. Secondly, once you've mastered not making losses, you will start to become profitable. And once you're profitable, you use the same template, the same method every month to generate even better trade ideas and compound your portfolio. Now, that's the goal of Sabr Trading Academy. We want to educate people the right way, in a halal way, but in a professional way. And unfortunately, there's not many professionals who are willing to do this. So this is a slide about the course. It's basically the WIS framework in a lot more detail. The first half is fundamental analysis, which is your world, industry, and your stock views. And the second half, from technical analysis, risk management, psychology, all that is part of your self-control part of the WIS framework. You can see this on the website, but it is a very comprehensive course. I've got a few other people going through the course who have their own Islamic finance companies. So people are valuing what's on offer, and it's not like any other course that is out there at the moment. And I just shortly want to go through a few feedback things that I thought were quite funny when I received them. So one person texted me, wow, this session was actually crazy. It's literally like we've been playing a game with blindfolds on when others have been looking as clear as day. It's actual madness. It's a game changer. It feels like there's more secrets. So that was from one person who said, he actually said to me, I think I won't learn anything on this course. And these are the types of messages that I started to receive shortly after. Another guy said, yep, gotta hold my hands up. This course was more than I thought it was. It's an actual game changer. And then someone said, I look forward to learning new things and learning something new every day. A few more. Having a great mentor makes all the difference. Your way of explaining information is second to none. And then this one in the middle, a guy who texts me his daily profit and loss. And it's just a way of saying well done to him. So his mind is stronger each day. And when you feed a strong mind, you're more confident in your investment ideas, and it does feed through into your daily lives as well. Final slide, and this is a limited time exclusive discount for everyone who's on this webinar today. The options of the course are twofold. You've got a 6-month access to all the videos, or you've got a 2-year access to all the videos. With that access to the videos, you get all your Excel and PDF files for free. You get access to the WhatsApp group with all the other students, which means access to me. And for the 2-year course, we've got a massive 25% discount, which is £500 off. The code for that is Halal 25%. And for the 6-month course, we've got a Halal 10% code, which you will get 10% off. And I'd just like to stress that along with this discount, if you went through the course, You would also get a 1-year free subscription with Halal stocks, which is a value of $780, and the value from that will be incredible. So I'd just like to stress for the final time, this is a limited time offer. It's exclusive to only people on this webinar today. Inshallah, I hope you learned more. Even if the course is not for you, I hope it added value to your trading and investing going forward. And I'd just like to stress, this is still the beginning. We're still in early days, and we still have a big movement to come, because I want to make a big impact in the Muslim community, and I want to educate people the right way. And that's where my interests and Halal Stocks interests align. We want to educate, and we want to offer you solutions for Muslims to invest in a halal, sustainable, and profitable manner. So I'd like to say salam to everyone, and I hope you enjoyed that. I'm going to hand back to Brother Rehan now.
Jazakallah khair. I really appreciate that, Brother Sultan. Alhamdulillah, I personally have gone through the course myself, and after, basically being in the stock market game for the past 4 to 5 years, Sultan's course was, very, very comprehensive, and it really taught me a lot more about the market, especially at a macroeconomic level. And then, being able to see the world view, the sector view, and then, the stocks view, looking at the supply chain of the trades that you're thinking about investing in, and then covering that off with the psychology piece was, I think, really, really important, because you learn through Sultan's course, you don't just learn about the markets, but you learn a lot about yourself. So that's something that I really valued, because there is, different psychological tests that we go through as well to understand what kind of traders we are, what kind of investors we would make. It's fascinating, absolutely fascinating. So if you want to learn something a bit more about yourself as well, I would highly recommend the course. You do come away transformed, kind of it was enlightening, but also slightly scary as well to learn those things about myself. But once you know that, then you can manage. And otherwise, if you're in the markets or you're just kind of casually buying and selling stocks, not knowing how a move will affect you is basically means like the markets have you, you're at the mercy of the markets. That, because they will absolutely poke you in ways that that make you feel uncomfortable. And if you're not already prepared for that, and you're not already have a trade plan in place and so on, your emotions will get the better of you as well. So very, very powerful course. And I appreciate Sultan for taking the time to put it together. It's quite a lengthy course as well. So just to prepare everyone, you're not going to be done in 1 day or 2 days or a weekend. It'll take you some time to get through that material, but that's really important because you get to practice it, right? And Sultan will be there to do that. Now, what we do at Halal Stocks, I'll cover one more thing, just because someone asked about 2022 performance, and boy, what a year 2022 was, right? So let me bring that up for you, and we can take it from there. 1 sec. Share my screen. Take a sec. So just to cover off, there was a specific question on 2022, and so 2022 was a fantastic year in the sense that everyone's correlation models were worth completely zero, right? Because the bond market crashed, the stock market crashed, and there was nowhere to hide. And so here's a comparison of what happened. So this is calendar year 2022. Obviously, the Nasdaq 100, those are like all the tech stocks in the US, ended the year 28% down. Global equity funds that invest in all parts of the globe, were down 19.7% on the year. Those that focus on the US stock markets are about the same thing. The S&P 500 was down 17%, right, on the year. And so because of the style of investing that we do, obviously there's a lot of risk mitigation in the models that we use in Halal Stocks. This is not Sultan's trading record. This is what we do at Halal Stocks, is create systematic algorithmic-based investing strategies, right, that have very, very good track records over long periods of time. And that's what you're looking at. So even in 2022, when it was doom and gloom, we were there to at least protect capital far better than the vast majority of professional fund managers that are out there, and that did put our performance for the calendar year in the top 5% of global, like out of about 3,000 funds. So proud of that, but knowing we also have to know that the stock market is this game, right? So this is the game. So there are times when you'll be down, and if you have good risk controls, you'll be down less than the market. In our case, significantly less. And then when you're up significantly more than the market. And that's how you generate alpha. Obviously, this performance is without any market timing being used. So we were 100% invested throughout the whole year of 2022. So it wasn't like we skipped out or we sold to cash or anything like that. This performance is based on remaining invested in the market, just being smarter than, as they would say, Yogi Bear, smarter than the average bear. So that's 2022 performance. Let me just have a look if there were any other questions here. And feel free to, if anyone wants to ask a question, or Sultan, if you want to jump in as well. Actually, I might just get your commentary on 2022 as well, Sultan, because it was an amazing year for you as well.
Yeah, so at the start of 2022, global liquidity started to plateau and QE started to stop. And the M2 money growth, which I was looking at, M2 money supply, which is a type of money that the US has. I was looking at global M2 and it started to flatten out. And for the last 10 years, M2 had been correlating quite strongly with the whole S&P 500. So I thought it's now going to drop. There was talk of QT, quantitative tightening. So I liquidated all of my stocks in Jan 2022, and I was fully cash. And because I live in the UK, all my cash was in GBP, in pounds. So then I thought, do I really want it in pounds when the UK economy is trash? So what I did was I swapped all my cash into USD, because flight to safety is your USD trade. So all my cash in my bank went into USD in Jan 22, and I was fully cash for 9 months or so. And during that time, GBP went from 135 US dollars to 1.04. So I made around 30% just sat in cash. The other 20 to 30% I made was from physical metal, which I was holding in a very safe place, not in my house. And silver moved up, gold moved up in my favor. So overall, my performance was from 4 different trades that I did that year. In September or October, I changed back into pounds. So I went from pounds to USD, back to pounds, and a few day trades here and there towards the end of the year when the market was quite volatile. And in that time, I made 65% cash on cash. So if I had 20K, that was now 33K, for example, in cash. But that was all through 5 trades or less. And the reason I wasn't that active was because I still think I'm a very bearish person right now. I think the uptrend in technology stocks in the last 6 months have been purely because of this AI hype. Okay, yes, inflation is coming down, but all your economic indicators are telling you that companies are going to start laying people off very soon. So yes, I made 65% cash on cash last year. S&P went down, I made 45% cash in cash. the market went down 20%. So I outperformed by 65%. So those are the exact numbers, but I wasn't active in the market. And even this year, the S&P's gone up 10%, but I've not been active because I'm waiting for that big crash to go all into I can't name any stocks, but yeah, I'm waiting for that crash to happen. I hope that answers the question.
Wow, jazakallah khair. And it's also very interesting that so not doing anything is also a trade idea, in the sense that is actually a move. And so the fact that you move to cash, and then just to clarify, Sultan wasn't FX trading. He was just transferring his GBP balance to a USD balance, which you can do very easily on an international broker. And then you can move it back as well. So that's not forex trading. All that is physically taking hold of currency it's foreign exchange in the true sense, whereas FX trading is typically not true foreign exchange. There is a question here from Brother Suleiman about where do you see the macro picture now in the markets? Sorry, and I'll unmute.
Yeah, so when it comes to the macro picture, all the reports that we look at, which you learn in the course, so I'm not going to name them, but the output of these reports, the manufacturing has been negative for 12 months, month on month. The services sector is positive. It's still positive, but it's approaching that level where that inflection point where it's going to go negative. And given 85% of the US economy is a service-based economy, I suspect we've got 6 months. So by the end of the year, I reckon the US will be in recession, even though it's not the formal 6-month definition that they go by. But I guess right now, even today, this morning, China had some figures come out where their imports and exports were down 15 to 20% month on month. And this was below expectation. And once China is coughing and the US is coughing, that's it. The rest of the world is going to follow. But the stock market will typically move before that recession happens. And the S&P, it's struggling to rise above 4,500. And it did that a few months ago as well. It peaked at 4,400, then it went back down to 4,000. It's now at 4,500. And there's just little appetite for the stock market to rise because of all these data points that are coming out right now. So once that downtrend happens, what will actually kill the market is when the retail traders panic. And when the retail traders panic, it goes down in a straight line of 5 or 10% a day. That point hasn't happened over the last 18 months because consumers have still been high on their COVID grants and loans and whatever else income they saved during that period. They've just been having a good time with that. But we're coming at that point now where it's going to be a difficult 12 months economically. And the stock market always returns back to the mean. It's not, okay, right now we might be in a bubble, but when it does return back to the mean, it'll be a good time to look into reinvesting all the cash and everything that I'm holding.
Perfect. We've got a few questions coming in, Sultan, if you want to cover off any of these.
Yeah. How much time is required for the course on a weekly basis? So this course, you can do it in your own time. It's 12 hours of video footage of me talking, presenting slides and talking you through how to do things. But you're going to have to watch it 2 or 3 times at least minimum to get more and more info as you go on. And so that's around 36 hours of watching the stuff and maybe another 50 hours implementing the stuff because it will take you time to learn all this stuff. So the whole course will take you around, I'd say 70 to 100 hours, depending on how fast and how many poses you do and everything. But a 100-hour course from start to scratch is going to save you hundreds of, maybe even thousands of dollars in the lifetime of your investing life.
I'll just add to that as well. There's a bit of homework as well in the course. So
yeah, that's the implementation.
It's not just watching Sultan, but you have to go and form your own view of the markets with the tools that it gives you and the reports and all the rest of it. So it's not a passive exercise. you will definitely be engaged. I think that's the exciting part, because you're learning in the wild, so to speak. The stock market is, it is a wild place. And so, kind of getting hands-on with it from the beginning is really, it's good when you've got a mentor and you've got a framework to work with, because you'll just come back a little, maybe with a few little battle scars, but knowing what to expect as well.
Yeah, so there's a few more questions. How much time for the course on a weekly basis? I've answered that one. The next one, is it possible to have a full-time job? How many hours per week? Again, you can do it in your own time. And with the whole investment philosophy, you won't need more than 2 hours a week to keep on top of your portfolio to generate new trade ideas. So that's what I do. I go in, what my day job is now, I go into various investment banks and hedge funds. I help them generate their trade ideas. And then my investing is on the side. I don't look at the screen. I maybe watch it when it opens and when it closes just to see what the balances are. And my trade idea generation happens maybe on the weekend, but also a lot on the day job. So if you're not looking at your screen, you can definitely go on this course and implement it. What investment philosophy do you follow? Value investor. So I go through this about a little bit in the course, where I don't believe, this is my personal opinion, I don't believe value investing works for the retail professional, because you would have to do a lot of research and a lot of digging to find that value. But if it is your day job and you're doing it every day, you can find those gems. So I would say I look more towards the higher growth stocks. And again, we go through this in the course, but I like to go for stocks that are volatile. So when their earnings come out, they're going to maybe go up 10 or 15%, and then I'll sell. So I look for those kinds of stocks that are growing, but not necessarily cheap. I'm happy to buy Tesla if I think it's going to rise 10 or 20%. Do you do your own app? No, I don't have an app right now. The course is pre-recorded. It's available through the website right now. So if you go to sabrdtradingacademy.com, and if you were to sign up, you'd have access to the course straight away and all the course material. And I would add you to the WhatsApp group within 24 hours. Live support, that is your WhatsApp group. So you have access to me on that group, or you can have access to me one-to-one as well for the duration of doing the course, for 6 months or for 2 years. But you also get the group WhatsApp with all the other students in there. And I post stuff on there every few days with economic data and what's happening in the markets.
Cool. So I'll just cover off some other aspects of the questions. One, from a Sharia compliance perspective, so Sultan does kind of show you how to do that yourself as well in the course, using the balance sheet and the income statements and so on for companies. But with regards to using an app, so there's a number of apps out there. At Halal Stocks, we do internal Sharia compliance checks ourselves, but Kestrel has a stock screener. Zoya is one of the most popular ones, and then there's Islamically as well, and then there's Musaffa. So you've got a host of different Sharia compliance screening apps. So they'll help you figure out if something is Sharia compliant or not, whether it passes the criteria. And then what myself and Sultan do in Sabr Trading and in Halal Stocks is help people actually find good trade ideas and actually find profitable companies to invest in, as opposed to just knowing whether something is halal or not. Because obviously, just knowing something is halal or not is not enough information for you to enter a trade. Please don't do that. Do not enter the market if you don't have a reasonable idea of how the market values companies and how the stock prices move. So otherwise, you could fall into a type of just gambling mentality, which is not healthy.
Yeah, so I wanted to add to that. So my philosophy is I want to help Muslims maximize your returns with the shortest time, with the least effort. And although I teach you in the course how to do this in Excel, I personally use apps for the compliance screening process. I prefer, well, they're all the same. They all give, there's some of them, there are variations in how they calculate it, but I tend to use the same methodology and stay consistent. And it just saves me a lot of time going through the balance sheet and typing numbers into Excel to see if it is halal or not. Sometimes if I think the answer is wrong on any app, because sometimes it can be wrong, then I double check and look into the accounts themselves. But that's if I've got a lot of time on my hands and if I'm desperate to buy that stock.
Great questions. Question for halal stocks. Do you guys use the algorithm to pick the stocks or just to time entries and exits? So on our side of the fence, where our algorithms are completely autonomous in that sense. So they do the full bottom-up analysis of a stock and then find those which are likely to be most undervalued at this point in time. So the algos pick the stocks. We have a governance layer over that with regards to Sharia compliance, ESG, and ethics, right? So there's another layer that goes on top of that, because there's some stocks may be technically Sharia compliant, but they have some other ethical issues, and so we'll add that governance layer on top. But yeah, it's other than that, it's a fully automated system. So when you see those graphs that I showed earlier with regards to performance, that's the machine doing its work, right? Obviously, it's been built and tuned based on very sound investment advice from some of the best investors of all time. But at the end of the day, it is the algorithms that are building the portfolio. That's what they do. They build the portfolio. And what I recommend is once you do Sultan's course, you'll get access to the algorithms, and you'll have a much greater appreciation of what they're doing. Otherwise, it can feel a little bit or quite mysterious, right? Because if you don't understand what moves markets and what does a good company look like, and when is a good time to get in from a macro perspective as well as technical analysis perspective, then you can improve on what the algorithms are doing by doing that. But you can also understand what's going on a lot better and gives you a bit more staying power, right? Because that's ultimately psychology plays a lot more again into that kind of if you're following like an algorithmic methodology of investing in the stock market. If you don't understand the stock market, or you don't have your emotions in check, you won't be able to hold on. It's like getting on a roller coaster without the harness. It's a pretty scary ride, and so you want to understand the markets before, ideally before you follow a system. Let's look at if there's any other questions and go. Sure, I think Sultan's covered that. Alhamdulillah. If there's no other questions, can you suggest any books? All right, I'll definitely follow up with that, inshallah. Sultan, any books from you? Any?
Yeah. So I myself have never read any books, and what I teach is from practical experience. And okay, I might have read a technical analysis book back in the day, but I only teach the most valuable technical charts in the course because they work. And I don't want to overload people's brains with all types of books because everyone has a different philosophy. Like even me and you, we don't have the same philosophy. You're using algorithms and systematic approach, and you were fully invested in 2022, but I was mainly fully in cash.
Yeah.
And as long as we have that basic level of education, which this course teaches, you can grow and you can play to your own strengths, because mine and your strengths are also different. So we've seen it ourselves. So how can we tell others my philosophy is, how can I tell people to read X, Y, and Z if I'm against books myself? I'm not saying all books are useless, but that's just my personal experience.
Yeah, it's obviously Sultan, someone who's learned on the job, right? And so that's practical experience that you learn on the job, and invaluable. And for me, I had to. I'm self-taught in that sense, so I had to go through the books and then figure out what works, because and that's why I chose a systematic route, because I can backtest. You can read a book and it sounds amazing and it makes perfect sense, and if you deploy that strategy in the markets in 2021 or 2022, you could lose a lot of money. And the reason is because the book was written during a different era, and so the principles are still true, but they manifest in different ways. And you may just be in the. I'll tell you a funny anecdote. In 2021, so I've always, my education has been from the value investing school, right? So in 2021, after doing that for 3-4 years, I decided that I'll learn growth investing. Yeah. And so I started going down the growth investing route, and I couldn't have picked the worst year of it, because growth stocks peaked early 21, and then it was just a slide all the way down into mid 2022, right? So it could feel like growth investing doesn't work, right? The reality is that you have to know what strategies or how to look at the market based on where the market's at, not where you are at, right? You might be an amazing growth investor, or you might be an amazing value investor, and right now is not the time to be that. And so one thing I like about Sultan and I is we will teach you very, very different things, not because they don't work, but because they work at slightly different ways on different companies. So at any given time, there'll be some growth stocks and there'll be value stocks, and they're different companies, they're different types of portfolio. And so you can diversify and make money at different times when the market's doing different things, following different philosophies, right? And if you're a Muslim, you understand the concept of madhabs, right? And so there are different madhabs in investing, right? And so when going through Sultan's course, it really opened my eyes to a different type and style of investing that I think is extremely valuable, and it was missing in my repertoire. And our algorithms complement that significantly, because they generate trade IDs very differently to the way that you would in Sultan's course. So very, very complementary, and it's good to be able to make money on both sides, right? And both different types. So it'll just it won't harm you to keep your eyes open to different philosophies in investing, because they do exist, and they all work if you know how to and when to use them.
Yeah, one final thing I'd like to add is the market is a beast, and that beast is always changing. So you need to, if I teach you something now, it might not work in 10 years' time, because the market might have different underlying characteristics. And like we've seen that with QE since 2009. QE has been pumping the markets for the last 14 years. But before 2009, there was limited QE, and it was actual growth of these companies like Microsoft and Amazon. From 2000 to 2007, there was actual genuine economic growth, and it wasn't just money printing, where the money has got to go somewhere, so it goes to the stock market. So what's going to happen in the next 10 or 20 years, it might be a totally different scene. You might be looking at a commodity super cycle in copper, lithium, vanadium, all these types of things, and technology might take a little rest for a few years. So the framework that the course teaches and the method that you have, which is a systematic approach, they both go hand in hand, and they can work at any time. But you need to know and you need to feel the market. And to get that feeling, you need to have a basic level of interaction with the people in the market and your own knowledge base and your own psychology. So that's my finishing comments for the day, inshallah.
No, Jazakallah khair, Sultan. Really appreciate your time as well. I'll hand over to Umair to close. But Jazakallah khair, everyone, for staying back as well. Obviously, we're over time. And but it's been really thoughtful engagement, discussion, and wonderful questions that are in there. And we'll send out a recording of this later on, inshallah, for those who couldn't make it. But yeah, if you're ready to start your investing journey, Sabr Trading Academy, and we've got the discount codes there. We'll email those out, inshallah, and you can sign up so that you can take advantage of this offer, because obviously we also have a paid for offering. We're bundling it together and offering it to you together as well. So this is definitely a limited time offer to do that, and I really just want everyone to get the best at making money out of the markets, because it is a very, very important time at the moment with inflation the way it is and the way that the global economy is going. Is having additional income or having additional ways to grow your wealth is more important now than ever before. All right, I'll hand over to Umar.
Thanks, Brother Rehan. I don't think I can really top those two closing statements. I'm just going to thank you guys for your time, both the presenters and the listeners. As Rehan said, we will share the recording link in due course. If there are any other questions, please feel free to reply to our email once you get the recording, and we can continue some sort of dialogue back and forth if need be. Once again, thanks everyone. We'll see you guys around. Assalamu alaikum wa rahmatullah.